In this video, we will talk about OTC markets versus main markets in binary options. OTC market is basically stands for over the counter, which means that trades actually occur directly between two parties without the involvement of an exchange. Okay, so it means that when we are in the main market, and for example we have this chart, we need, like, for example, 1,000 people, this is just an example, to push the call button so we can get this candle. Okay, but in OTC we don't have this amount of traders because it's not connected to other exchanges, and the OTC market is actually for that particular platform. It means that the OTC market in QTEX is different than OTC market in pocket option in the same pairs. Okay, I will show you the charts side by side and then you can see that how it works. But on the other side we have the same like candles, and then we need like 10 people to push the call button to get the same candle. It's basically simulated the main chart, and since we have less people trading in OTC, there's some robots that they kind of adopt and they try to act like the real market. I mean the numbers. Okay, so yeah, this is about the OTC. And are they really different? I will talk about the common perspectives on what the majority of people think about OTC. Like, if you look at this table, you'll see that there's a couple of common perspectives about OTC, and I will also add my perspective as well. Okay, so what is the difference between them? I mean, the main market and OTC market. So most of the people think that OTC market is just super volatile. There's high risk trade in OTC. There's low transparency since this is not really regulated, and in general they just like don't trade OTC ever because it's probably seem like less profitability, especially for binary option. These are some perspectives that people have, and also they get suggested from other maybe traders or other YouTubers that OTC is dangerous or just avoid trading OTC. Yeah, they set higher percentage to make you lose, make you greedy. They manipulate candles. For example, if you have a call option, they create a red candle, which is very ridiculous because when you are in a call option, there's so many people like in a put option. So if the broker is gonna manipulate, basically there's like it's not even different because, like, for example, if 20 people are going call option, maybe 25 people going like a put option. So basically it's not going to make a lot of difference for them even watching the candles. Okay, these are just common perspectives people have. Yeah, broker is watching you, broker. Yeah, so yeah, the people just thinking about broker is gonna like you know, brokers just need your money. Okay, and I'm here to tell you that everybody knows that in financial markets, doesn't matter if that's binary options, that's forex, it doesn't matter. Like, plus 90% of the traders are losing money, plus 90% in both forex and binary options. So it means that the brokers are, you know, brokers are making money anyways. Okay, they cannot really they don't even want to watch the candle. Like, people like the manipulating candles for you to losing trade. They don't need to do that because they already losing like on the main market. 90% of people just losing on the main markets. There's no manipulation in main markets against the traders, so they are losing there. So obviously there's no need for manipulating candles for traders on binary option in OTC. Okay, so this is very ridiculous that people think that brokers might do that, and yeah, this is just some common ideas people have about OTC. But I will show you some charts, and people also, some people, I have done some research and I asked a couple of people their opinion about OTC versus main market. There was a guy talking about, okay, main market is clear, but OTC market is just long weeks. We don't know if we go for with buyers here, we might have a long shadow, we might drop like this. And he has an idea about OTC market is hairy, OTC market is not clear, but real market is clear, and working based on some I don't know. I don't know, man. And this idea, I was like, what? And then I decided to gather some charts for you to see, for you to really see the difference in terms of like chart, and to see, is there any difference really? So if you look at this chart, is this an OTC market or is it a main market? Okay, what is your idea? Okay, this is an OTC, AUD CAD OTC. Okay, so let's move on to the next chart. What about this one? Is this an OTC? So based on that guy's perspective, it should be an OTC because we have super long wicks. The market is not moving very clearly, so it should be OTC, right? But this is GBP USD and its main market. Okay, so what is the conclusion of this? I will show you a couple more charts. What about this one? This is again GBP USD main market. Okay, what about this one? OTC. Are they really different? I don't think so, because like if you really research about the charts and look for differences, you will see that both markets, main market and OTC market, they both have this kind of bad markets. They call bad markets because of long wicks, and they both have bad markets. They both have clear momentums. They both have healthy markets in some cases. So that's really about the trader finding him or her particular preferred type of market. It's not about being OTC, it's not about being main market. Patterns work here, patterns work everywhere. I've been trading OTC for a long time. Okay, so there's no difference. Let's move on to the next one. Look at this one. Is this a OTC or is a main market? Oh, what happened? Okay, it's GBP CAD and it's main market, and still we see some dojis, long weeks. Some people think that okay, this is just happening in OTC, but I don't know. So in terms of charts, there's not really a lot of differences. Okay, this is real market. Still doji breaks works here. Still the engulfing pattern works here. Retracement. Okay, still the overlapping level works here. Okay, it doesn't even matter. Okay, so my opinion is flexibility is the key. So in order to have the best type of results in trading binary option, you have to be flexible enough in different sort of markets. If you look at this one, we have a pretty ranging plus healthy trend. It's just coming down, it's dropping, and it's kind of healthy, it's kind of hairy as well. And yeah, what about this one? We have a ranging bad market. Okay, this is called bad market. For me, it's a good market. Okay, but since we have a lot of long wicks, a lot of rejections, no clear levels, gaps, not really clear levels, gaps on the levels, and people find this complicated to trade. For example, if you look at here, if you go with the buyers right here, we actually close up here, but this is a red candle. So this is this is a bad market in so many people's perspective, but for me, it's just different style of trading. If I'm in this market, I'm not gonna enter immediately after candle close. I will enter with marginal safety on common points. For example, here, let's say we don't have these candles, and we have this chart right here, and I'm trying to I'm trying to predict the next candle after this green candle. So is this logical to go with the buyers or sellers immediately after this candle close? No, because we have tons of rejections. We might have, for example, the red candle for, till the last second, boom, we jump up. So it's better to enter at the common points of rejection. Common point of rejection for this case, it's gonna be here. So we will take your trades on this one. Even if we have a round number here, it's even better. So that's really depend on how you look at that particular type of market. Okay, so it's not really about being OTC or being main market. The markets are kind of same. We have the same situation in the real market as well. We have this in OTC, we have this in real, we have this one in OTC as well, we have this in main market as well. Okay, so every single type of market happens in both OTC and main market. For example, healthy trend right here, not really hairy candles. We can go with the trend. I don't know what was the past, but I think this is a healthy downtrend. We have both. We have this in both main and OTC, and also momentum trading right here. Momentum, it happens in both OTC and main. Just you have to detect and base and take your trades based on the market. Okay, so this is about the flexibility in terms of choosing the market to trade. What is flexibility in binary options? As I told you earlier, it's about like when we have a long week bad markets, it's better to take your rejection trading style. When we have like healthy trends, it's better to take price action and continuation trades. You can use patterns as well. Price action, I mean the 5-minute, 3-minute trades. Okay, 3 minutes or 5-minute trades. But if I go to the previous slide, I'm sorry. Okay, like, is this logical? Is this, I mean, does it make sense to take your price action trade right here, take your 3-minute trade, for example, go for 3 minutes with buys right here, or even we broke this ranging here. Is this logical to go with the sellers for 5 minutes? No, because it's not a proper market to take your price action trades. But this one is. But this one is. This one also is for momentum trading. Okay? I hope you understand what I mean. So we have momentums, keep taking the direction of the momentum. And yeah, this is just some examples. Sometimes we have healthy ranging markets trading on SNRs. Healthy ranging markets means that when we have a range, and the candles also not very long shadows. Okay, candles not very long shadows, and they are pretty much healthy, so we can count on the SNRs on this kind of range. But if we have like stupid shadows like this, we shouldn't take our trades on candle close on SNR, for example. It's going to get a little risky. It's better to enter on rejection points. Okay, so when we have long shadows, it's not going to be healthy. When we have small shadows and candles, solid bodies, it's going to be healthy. So healthy ranging market trading on SNRs. And like long week ranging markets, as I showed you at the previous slide, rejection trading above and below levels. You can also combine the round numbers as well. So in conclusion, OTC and main markets each have every single type of markets. If they have ranging market, they have healthy ranging market, they have trends, they have bad markets. Okay, and main market is annoying. And oh, this one is very like for me, this is one of the main reasons that I don't trade on main markets. Okay, I don't care about the higher, I mean, the OTC has higher payout, it's usually 92%, but I don't really care about this one as much as this one. I get annoyed by like a broker changing the trade time. Okay, I will show you what I mean. You should trade based on the particular type of the market you use. Okay, so yeah, I will show you what I mean by changing the trade time, and also I will show you a particular pair on different brokers to show you that the charts are different when it comes to OTC in different brokers. Okay, so let's go to the chart. Okay, if you look at here, we have this AUDCHF and we have this unhealthy ranging market. Okay, if you look at this one, we have this kind of situation and this AUDCHF in pocket option broker. But if we go to QTEX, you will see that it's totally different charts. I mean, the prices can be close. Let me see what AUDCHF, yeah, prices, even the prices are not the same. Look at this one. So it's just its name, okay? It's not really, it does nothing to do with the real AUDCHF pair, okay? It's just a number and just charts moving. So different brokers have different charts in OTC market. You cannot have the same chart in pocket option like AUDCHF OTC on the same pair on the other broker. Okay, I hope you know what I mean. So yeah, it's not about only AUDCHF. You check the other like AUDCAD, other pairs as well, that's the same. Okay, yeah, you see that we have this market right here and this broker, the same pair, OTC AUDCAD. Okay, but it's different. And about the messing up the trade time, like look at this one. We have 1 minute, we can take marginal safety trades. Okay, 1 minute, we have pretty much in every single OTC 1 minute. But when I go, like for example, to a main market, for example this one, you see that it changes to 2 minutes. It means that if I take this trade, okay, it's gonna close on the next knot and the other candle. I mean, if I take my trades after this candle close, it's not gonna close on this one. It's gonna close on the next one. It means that it has like, yeah, it's gonna take 2 minutes. So I cannot take marginal safety trades when it's 2 minutes. And also, if I switch back to OTC again, it's gonna stay on the 2 minutes. So you have to change it manually. And I had like I had a period in my trading journey that just I had a lot of losses just because of this, just because of not being aware of this has been changing to 2 minutes. And I'm thinking like, okay, it's 1 minute, I'm gonna enter with marginal safety, and after taking the trade I'm like, wow, it's 2 minutes, and the next candle comes down and the other one is gonna go up and I lose the trade. Okay, that's why I just prefer to take my trades just on OTC. Okay, this is the main reason for me not really caring about this payouts, not a lot. And yeah, for me, I'm okay with OTC. Okay, you might like find some people that they are not okay. It's fine, it's up to you, it's totally personal preference. I'm not saying just take your trades on OTC. And also, yeah, this is just my opinion about OTC versus main market. I hope it was useful. You can also ask your questions about this in the comments. I will answer all the comments. And yeah, if you have anything to mention about this topic that I didn't mention, I'll be very happy to know, and you can write it down on the comments. Thank you for all your supports. I love you so much. If this was useful, please drop a like for me, and thank you for watching. Peace out.